Hi, thank you so much. On behalf of Ventura Securities, I welcome you all to Q2 H1 FY24 conference call of Welspun Speciality Solutions Limited. With this, I now hand over the call to Mr. Salil Bawa for his opening remarks. Thank you, and over to you, sir.
Thank you very much, Tushar, and good morning to all of you. We are delighted to welcome you to the first earnings call for Welspun Speciality Solutions Limited. Present along with me today on this forum are Mr. Anuj Burakia, Chief Executive Officer and Whole-Time Director, Welspun Speciality Solutions Limited. We also have Mr. Percy Birdy, Chief Financial Officer for Welspun Corp. And joining us is Mr. Brijveer Singh, Chief Financial Officer of Welspun Speciality Solutions Limited. And I also have my colleague Gautam Chakrabarti, who leads IR for Welspun Corp. You must have received the results and investor presentation of the company, which are also available on the stock exchange. We will start the forum with opening remarks by Anuj, followed by financial update. We will then open the floor for your questions. During the discussion, we may be making references to the presentation. Please do take a moment to review the safe harbor statement in our presentation. Should you have any queries that remain unanswered after this earnings call, you can reach out to Gautam or me. Without further ado, I will turn the floor over to Anuj. Over to you, Anuj.
Thanks, Salil. Good morning, everyone. I hope you all are doing well this morning. I'm pleased to welcome you all to the first earnings call of Welspun Speciality Solutions Limited. Talking briefly about the external environment, despite various global economic challenges, the Indian economy is showing its resilience. With IMF increasing its growth forecast for 2023, India is likely to grow at a 6.2% in both the year 2023 as well as 2024. With this backdrop, let me briefly touch upon the industry scenario. As per the International Stainless Steel Forum, ISSF, the global stainless steel long products consumption will grow by 3.1% in calendar year 2024. This is after observing a likely growth of below 1%, 0.7% to be precise, in calendar year 2023. European region has been witnessing a slowdown and lower optimism owing to ongoing geopolitical tensions, also resulting into other consequences, including energy security and subdued demand. While the demand in other markets, for example, USA and Asia, is moving cautiously, Indian market has shown resilience thanks to robust policy interventions by the Government of India, including the Make in India initiative. The country is witnessing increased capex and upgradation spends in various strategic sectors. In this context, Welspun Speciality, with its integrated setup and clear focus on new product development, remains very well positioned to capture the opportunities in domestic as well as export markets. Here I would like to highlight a few things. WSSL is the only integrated producer of stainless steel bars and seamless pipes and tubes in the country. The company could successfully develop and commercialize various new grades and products, including customized grades for very critical applications. The company caters to the niche and strategic sectors like energy, nuclear power, defense, oil and gas, petrochemicals, etc., etc. SS bar sales volume during first half of the year rose by more than 3 times year on year to about 8,400 tons. Similarly, pipes and tubes sales also rose by about 46% year on year to about 2,500 tons. The current order book of the company stands at about 4,500 tons, valued at about 170 crores. The company has witnessed a very clear turnaround during H1 financial year 24, clocking total income of about 380 crores. EBITDA during H1 grew to rupees 41 crores as against just little over 1 crores during H1 of last year. Similarly, PAT stood at over 16 crores during H1 against a loss of about 19 crores during H1 last year. Quarter 2 total income jumped by 128% year-on-year to about 214 crores. Quarter 2 EBITDA and PAT stood at 17.7 crores and 5.2 crores respectively, compared to a PAT loss of 11 crores during quarter 2 of last year. Welspun Speciality has embarked on a major transformational journey over the past 2 years. There has been a sharp focus on enhancing operational effectiveness in terms of production efficiency, quality performance, scale, and profitability. The company has collected various quality accreditations and approvals from leading international and domestic customers. Revenue of quarter 2 financial year 24, the highest ever recorded by the company, is the testimony of our growing acceptance and expanding customer base, which continues as we move forward. Welspun Speciality has delivered on several new products and grades, including very high value, high pressure heater U-tubes, nickel alloy grade bars and pipes and tubes, for example, alloy 800, 825, Monel 400, amongst others. The company has successfully commercialized precipitation hardened grades like 17.4pH and duplex, both in forms of bars as well as tubes. A very recent development of Super 304H grade steel bars and tubes is a very, very significant initiative towards indigenizing boiler tubes used in supercritical boilers, which up until now only used to be imported in large quantities. The company sees significant potential in this segment given the government's focus on power sector and priority towards providing uninterrupted electricity across the nation. As a continuous endeavor, while the company continues to add new customers in existing geographies, it made its foray into another large segment territory, that is United States of America. The first shipments have already reached, and we expect to secure more and more customer approvals and volume ramp up in the upcoming quarters. We believe equally important is to focus on sustainability and excellence initiatives to be able to remain eminent and ahead of the curve. I am pleased to share we have already kick-started our ESG maturity journey, and our sustainability and excellence initiatives have been progressing very well. Share of renewable electricity has been improving gradually, and it has reached to a level of about 30% of the total electricity consumed. The company continues to work on becoming more and more sustainable and going greener on its products. On governance, our board comprised of directors with diverse experiences across sectors and 50% of the directors being independent. All the key committees of the board are led by independent directors. As the European Commission mandated necessary greenhouse gas emission reporting from 1st October 2023, I am happy to inform that the company is ready with its compliance requirement with respect to exports to Europe. Backed by its integrated manufacturing process and product offerings, the company has a unique presence in its addressable market segment. So with this, I would like the moderator to open the floor for question and answers, please.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. First question comes from Anil Thakur, an individual investor. Please go ahead.
Hi, good morning to you, and congratulations on good set of numbers. Just two questions.
Good morning, Anil.
Just two questions. One is, what is our capacity utilization during these last 6 months? And the other one was, what is the average cost of borrowings? Because, a lot of our EBITDA is going towards servicing debts. Thank you.
I could hear your second question, average cost of borrowings. What was your first question, please?
Average capacity utilization during first 6 months of this financial year.
Okay, average capacity utilization. Okay, so Anil, as the company is undergoing a very, very major transformational journey, which also includes increasing of or ramping up of the capacity utilization. During first year, I would say that our capacity utilization on the steel plant on the bar side had remained less than 50%, and but improves quarter on quarter. And on the seamless pipes, utilization had been over 70%, so which is higher than what we experienced during the last year. So we continue to progress on these. On the average cost of borrowings,
8.5%.
it is approximately 8.5% on the overall borrowings. So which is, I think, for this business is in line with the market.
Right, sir. Thank you.
Thanks.
Thank you, sir. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Jatin Damania from Seven Investment Managers. Please go ahead.
Thank you for the opportunity. So can you share the market outlook in terms of our steel business and the order book for the seamless pipes?
So, thank you, Mr. Damania. I mean, the total order book, as I said, is approximately 4,500 tons, which is valued at about 170 crores. So, by and large, what we operate at this point in time is with anything between 2 to 3 months of order book for both of our products, and which keeps changing a little bit here and there from time to time. The whole endeavor is to, as we get more and more approvals, more and more customer base, the idea is to grow it more than 3 months and for times to come.
So, sir, in terms of approval, how much time will we take? Because the order book seems to be, gives visibility for the near term only. But when you look from a longer term perspective, there is a bleak outlook because of a 2 to 3 months order book in our hands. So, how shall one look at, or probably you can give a broader outlook in terms of the market perspective? That will be helpful.
So, Mr. Damania, this is a business where projects are not generally very, very large quantity single customer thing. The business is of a nature where the more and more customers that we get and more approvals we get, the more and more visibility and stability which is going to come in. If we look at over a period of last 4 to 6 quarters, our order book duration is consistently improving. And I am very sure that as we move forward over the next quarters, we see this to be growing and bringing in more stability as we progress.
And so, given the volatility in the steel prices, how as a company we are managing the raw material risk?
Yeah, so that's a very valid point. You see, in case of stainless steel also, of course, there is a lot of volatility as a nature of this product, whether it is scrap prices or ferro. As a policy, by and large, we address this volatility by way of doing back-to-back coverage of raw material as we book our business. So, as a policy, we follow that we do not get exposed to the volatility of the market. And so largely able to successfully implement that strategy.
So largely entire part of our raw material is hedged by the contract, right?
Yes.
Yeah. So last thing, and I'll continue the previous participant question, as large portion of our operating profit is going for servicing a debt. So can you help us in understanding the debt reduction plans and the company taking a step to reduce the debt? And what will be the debt level at the end of FY25?
So, the total long-term debt is to the tune of 207 crores at this point in time, and these payments are going to 2024 and until I think about June 2025. So we definitely expect the growth in profit, growth in our capacity utilization, better cash flows, and we will be in a position to repay the loan in timely manner. So this is a clear confidence that we have.
Thank you, sir. That's all from my side, and all the best.
Thank you. Thank you, Mr.
Thank you. Next question comes from Meeraj Shah from Aryan. Please go ahead.
Yeah, thank you so much for the opportunity. Sir, I had a few questions. First being, sir, could you just let me know the realization that we are currently having in both the segments, in bars as well as in pipes?
So really, I would say since, the business is such that there are diverse nature of grades and products, and so it will not be probably, appropriate to put one value, to the realization. So within bars, I mean, we sell, let's say martensitic grade, which can sell at something like 150 rupees a kg. I mean, if I say, in Indian rupees. And when we sell nickel alloy bars, they can go as high as 15 lakh rupees a ton or 18 lakh rupees a ton. And similarly on the pipes, I mean, the base grades probably would sell at something like 400 rupees a kg, and it can go as high as, 5,000 rupees a kg. So I think, this will not be probably the right measure, to really see the progress.
Understood. Right. Sir, could you tell us how much inventory do we have on books right now, and if the value also? Because if I'm not wrong, this is basically all scrap stainless that we reuse. Please correct me if I'm wrong in understanding that part.
No, you are right. So when we produce our steel, obviously our major raw material is scrap, and that is what also gives us the efficiency by way of recovery of ferroalloys, and also, it's like a green process. So as far as the inventories are concerned, at the end of Q2, our total inventory with work in the in process inventory as well as fixed inventory stood at about 185 crores, and wherein in Q2 we clocked in a total income of 214 crores. So I think with the growth, the inventory also has to grow, not exponentially, but yeah, I mean, at this point in time, I think our inventory levels are absolutely appropriate with the level of volumes that we are churning out.
Right. So, the order book that you said is 170 crores. That is sufficient for the next 3 months, or would it be for a lesser period than that?
No, I would say, if I do mathematics, it's good for only 2 months. So, the important is that how we keep filling more than a month every month, and that's how increase the balance of order book from 2 months to maybe 3 months and months going forward. And I think we are on the path.
Right. Okay. So the inventory levels would be sufficient for the orders that we have on hand right now. That would be a decent understanding, right?
Yeah, absolutely. I would also believe so, Neeraj. This inventory level is something which is healthy for utilizing or for executing our strategy towards production and sales.
Understood. Right. So my next question is that on the capacities that we have, what would be the peak volumes that we would be able to do, and by when would we be able to achieve that?
It would be really probably premature to say that, Virajji, as we progress, but I can say that we probably already gave some guidance before in various forums. I think by towards the financial year 26, we expect that we should be able to reach to a consistent run rate of about 8,000 tons on the pipes or better, and about 60 to 70,000 tons on steel bars or better.
Understood. Right. And so one final question before I join back in the queue. We've been talking a lot about entering different geographies and exports as we've entered in USA. I'm sorry, actually I joined the call a bit late, so this may be repetitive. If you could please just highlight the kind of opportunities that you're seeing in exports and how quickly can it be scaled up, especially with the US entry that we've spoken about. Could you please just highlight that once for me?
Yes, Mr. Virajji, first of all, let's understand, for stainless steel, historically the Indian industry got evolved and designed considering the export markets, and very naturally so, because the consumption in India for stainless steel, which is now growing, obviously, very, very fast. But the consumption, we see better consumption in the countries like, all the European countries, the US, and the other developed countries. So export obviously is very, very integral, to our strategy. And I would say that, depending on products and how we get our approvals and, accreditations, we will certainly have more than 50% role to play by the export markets. So that's why it becomes really important for us to garner more and more customers, reach out to more and more geographies, and increase our sales, on the exports. And I would say we are on the path. I mean, we are very well accepted as a strategy. We first started to move around in the European market, which was, closer to us. And in last one and a half year, I think we've been able to really make a very good impression there, and we are getting repeat, business from the same customers, and we continue to garner more and more customer approvals. So now was the time when we should start another large market, and which we found in form of US, and there we already entered with our first products already reached there. We are getting very good feedback. But obviously, as in this case, it's a very, very special product. In spite of all, good things that you bring on the table, a customer would go a little cautious. They would go for trials. They would go for, all the process that is warranted, in this kind of a process. So we see a clear roadmap, and we see, a clear ramp up in all these geographies in times to come.
Understood. I have a few more questions. I'll just get back in queue. Thank you.
Yeah, sure. Thank you. Thanks.
Thank you, sir. Next question comes from Nirav Shah from DC Holdings. Please go ahead.
Good morning, sir. Am I audible, sir?
Yeah, good morning, Niravji.
Yeah.
Very audible. Thank you.
Yeah. Congratulations on the turnaround, sir, that we have seen for the last 3 quarters, and appreciate we holding a separate call this time around. So really appreciate that. Sir, I have a few questions. Firstly, you just mentioned that about the export mix, but if you can just specifically give for both the products, the bars as well as pipes, that what is the mix and what are we targeting over the next 2-3 years? Because we will be in a ramp-up stage. So how do we see that market over the next 2-3 years? I mean, yeah.
So, I would say, Niravji, like in quarter 2, out of about 213 crores of sales, our exports stood at over 30%, including both the products. And this percentage of export, if you look at, overall H1, is more than 40%. So quarter 2 specifically, as I also, referred in my opening remarks, that, the European market on which we are at this point in time is one of the main markets for us, had been going slow. And that's how we see, a blip on that account. Product-wise, I would say the bars got exported to about 70% during quarter 2, and pipes about 30-35%. So overall, in these 2 quarters, I would say 65% bars got exported, and 35-37% of the pipes got exported.
Got it, sir. And the incremental growth will likely come from, it will be a mix of both?
So yeah, of course, it has to be a mix of both. Pipe is a much higher value add product, but at the same time, nonetheless, I mean, even steel bars for us, and the kind of grades and the products that we are producing and we are looking to develop, of course, it is equally important business, for the company. So we see growth coming from both, bars as well as pipes and tubes.
And so just on the profitability front, we've seen some pressure sequentially. So any particular segment that we've seen, while exports, you've mentioned that Europe was seeing slower demand. So was the pressure more severe in the bars pipe, and how long do you see this pressure sustaining?
So, Neeraj, I think it is an important question, and I would say, as I was sharing before, also the markets remain subdued, and there is, of course, a temporary pressure on the margins. So this, however, we should consider as a blip in the overall strategy of growth and transformation of the company. if you look at the bigger picture, this business is getting built brick by brick, with an objective of long-term and sustained value creation. So there's a huge opportunity emerging. I would say, the whole world is talking about sustainability, of which a very important element is life cycle costing and life cycle value. Stainless steel, as we see, is now replacing carbon steel in so many different applications, and this is augmenting stainless steel consumption in a very good way. Take an example, Indian energy sector is another incredible opportunity coming our way, and is clearly opening up huge scope for SS seamless industry, including us. So we continue to focus on expanding our customer base and our product offerings, and are extremely confident of our sustained performance in times to come.
Correct. And sir, from your opening remarks, you mentioned that you are the only company in India to make tubes for supercritical boilers. So how big can that market be? Because right now it is 100% catered by imports. So what is the size of opportunity over there in tonnage terms, or if you could just indicatively.
So Neeraj, I would correct a bit here. So it's a recent development for us, and perhaps we are the only company in the country who have integrated, produced these critical tubes in an integrated manner. That is,
to
produce the steel as well as we produce the pipes. So I cannot really comment as to if there is at all any other company who could do that.
Okay.
But by and large, all these tubes up until now had remained imported, and that is, we've gone through a grind of getting validations and approvals, and which is in its last phases now, in which the Bharat Heavy Electrical and National Thermal Power Corporation and agencies like that are involved. So it's really a niche product, and we know for sure that the Indian energy sector is going to grow big time. And very recently we hear that a lot of new power projects have been taken for consideration for implementation. And any supercritical boiler would have a huge quantity of these tubes going into it. So there is a clear opportunity that we are seeing coming our way, and very, very soon. And that will remain, for probably 2 years. So that's why it becomes. Yeah.
And so final question, while Welcorp has shared some guidance in terms of FY26 numbers, but are we sharing any near-term guidance for, the production guidance for this year? How much are we planning to do?
So Neeraj, I think, we would like to remain cautious on this front, because, at this time, as we are going through a very, very massive transformation. A lot of things are happening. There is internal strategy, and there is a clear plan in place. So we are just hoping that we are able to implement and put together a strategy in the way it has been formed, and we will see results.
Perfectly understand, sir. Not an issue. Thank you, sir, and all the best, sir. That's from my side.
Thank you.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Next question comes from Tushar Pendarkar from Welspun Securities. Please go ahead.
Yeah. Hello, sir.
Yeah, hello.
Sir, since we are exploring opportunities in the overseas market, and we are also diversifying our product portfolio, so what is the steady state EBITDA per ton we are targeting in the next 2-3 years? Is there any internal target to reach at that level?
So, Tushar, I would say that this could be a little sensitive, to be spoken in the open forum. I can only say that we have very clear strategy of protecting our profitability in the medium and long term, and that's how the company's focus is very clearly set on producing things which are really niche. So I think let's look forward to a sustainable growth, of which we have very clear plans.
Okay. Great, sir. Thanks. That's all.
Thank you.
Thank you. We have a follow-up question from Neeraj Shah from Harian. Please go ahead.
Yeah, thank you for the opportunity. Sir, I had some questions regarding export. So, while answering the last question, when I asked you, I had mentioned that there are certain certifications and accreditations that you receive. So I wanted to know how much more can we have in terms of certification and accreditations to get direct orders from customers, which would help us in an easier approval from the customers that are there?
So I would, I would just give you a brief on how it happens. So there are, there are something called accreditations, which is like, getting an agency to audit the systems, quality management systems and the capability, and then, there is an accreditation given. I'll give you an example for, if you want to supply for marine applications for the ships and all, so there is something called a marine approval. Now, that is an accreditation. So the company has already got that, and there are so many others of that nature, which comes with the time and which comes with the experience, and every accreditation has its own need, has its own prerequisites. Now, when we talk about approvals in real sense, so there are two kinds. One is every customer may run its own, approval program, these being high value and, niche products. And so, it is like, not something which, which can end at any day. So every new customer coming in will run some or the other process. And then there are the third kind where the process licensors or the EPC companies who are not buying directly from the company like us, but, they are authorizing, their suppliers to use steel coming from us or use tubes and pipes coming from us. So which is like an indirect approval. So there are all kinds, and I think, we have been able to, gather quite a lot of them, and that's how we can also see the growth in our customer base and the top line. And we continue to work on that. And, as we progress, I think there is a clear plan as to which more approvals are being targeted in this year and, what are going to come in the next year and things like that. So,
understood, right.
Yeah.
So my next question is, as you've been talking about how much exports you would aim to have and how much exports we are having right now, but on the contrary, the Indian markets are also looking lucrative. As you said, that there is opportunity for import substitution as well. So what would be our focus market for now? Is it spread equally? And if you could also highlight on what kind of, margins we make in exports and we make over here in India. So if you could just give a brief about that.
So I'll break your question into two parts. One is the divide between the domestic sales and the export sales. And if you ask me to be honest, this is also a project-based business, and the projects opportunities in exports and in the domestic territory might undergo a change, from time to time. But by and large, as I said, that we still, we definitely have a target of about 50% or close to 50% of the sales in the export market, for a simple reason that, they are already developed markets, and at the same time, at this point in time, there are better realizations. Having said that, not that the domestic market do not offer opportunities. As I said, it's, the sectors are really opening up. For the last 2.5 years, we are seeing some, major traction, coming in a lot of sectors in India, including oil and gas, including, defense and space, as well as, let's say, in the energy and nuclear power, and, so that's how, if you see, as I said in Q2, our sales on, of about 70% or 65 to 70% went into domestic territory. So we are not undermining the Indian domestic sector, and, it's definitely very, very lucrative, and in times to come, it is going to become more and more lucrative. So we are carrying a clear balance, between export and domestic, while ensuring that, we get the best realizations for what we produce.
Understood. And sir, just one, I think this would be a repetitive question, but on the margin side, EBITDA per ton, if you were to look at it, sir, any aspirational numbers that you would aim for, if you could give a guidance for that?
I think That would be sensitive, Neeraj, because as I said, there is a host of variety, that we produce in this boutique business. Within bars, there are so many products. Within pipes and tubes, there are so many products. So I think what we need to look at is the overall growth in margins and the overall profitability. And we are very, very confident. We know, what kind of plans we are implementing here.
Understood. Thank you. And so just one final thing, the raw material that we are currently having, sir, do we import it and or do we source it locally? Or is it a mix of both?
It is a mix. It is a mix, I would say, because a lot of scrap gets imported in the country for a simple reason that there are, the nations that consume the most of stainless steel will generate the most scrap. On ferroalloys, of course, some of the ferroalloys are all imported because they don't get produced in India, but some of the major ferroalloys are also produced in India. For example, ferrochrome we buy, I would say almost all of it locally. But similarly, ferronickel is what is imported. So, various items, various suppliers, some items are a mix of domestic as well as import.
Right. Could you just in a nutshell, if you could say what percentage is imports and what percentage is locally sourced?
Well, on the value side, I think I would not have that, on the tip of my understanding. But yeah,
no
we can take
worries.
it offline. Yeah, you can get in touch with our investors. We'll get you the number.
Thank you so much. Thank you, sir. Yeah.
Thank you. Thanks. Thank you.
We have a follow-up question from Nirav Shah from GC Holdings. Please go ahead.
Hi, sir, and thanks for the follow-up. A couple of bookkeeping questions. What is the CapEx that we are looking at for this year and next year?
So we are very clear, Nirav, we are not looking at any capacity expansion or anything of that sort in immediate future. So our focus is going to be utilization of existing capacity. Of course, it will entail, some gradations or let's say technology upgradations as well as some process, So it may involve some sustenance capex, which will not be huge for sure. So no major capex plans for us.
So that would be in the 10 to 20 crore range.
Yeah, I think that's probably going to be less than that. So
okay. And that will help us achieve whatever the guidance we have for the next year's production and sales.
Yes, of course, yes. For the foreseeable future, we are very clear what we need to do, on our plant front. Yeah.
Got it. And the second question is on the other income. This quarter there was a significant. So what is any one-offs over here, or what's the broad breakup of this 5.7 crore of other income?
So this is just give me a sec.
Incentive income.
So this is portion coming from the incentive from the government of Gujarat, which is linked with the capital investment made by the company back then, and some are the balances written back from within the provisions, and some are coming as, let's say, a portion is coming as a foreign exchange difference.
Okay. And what's the write back number, which is non-cash?
Oh, it's not big. It's about 40 lakhs.
Not big. Okay, got it. And so just a final question. I'm looking at our ESG intervention slide. And I understand that we've just turned around, and the last item appears as dividend distribution policy. So, what's the thought process behind adding this line item in this as a policy? And what are the thoughts on the dividend distribution?
So the idea, Niravji, is that, let's say ESG has a dimension of governance, which is one of the three major dimensions under the ESG program. So there has to be a policy around major aspects of the business, and dividend distribution, which is like a payout to the shareholders, is also a very, very important aspect of the business as a whole. So, as a company, as a part of our ESG, governance mechanism, we have a policy around, dividend distribution.
And if you can just elaborate what the policy is, So,
I know this is Percy here. See, basically, the is at a stage where they need to get strong free cash flows. And obviously, the first priority would be the debt reduction. And then, of course, they need to finance the working capital for its growth. Because as you can see, numbers, the company is clearly a turnaround story and on a sharp growth path. So all these indicate that first priority is the funds will go towards debt reduction and financing the working capital that is needed for the growth. Of course, after that, the surplus funds would definitely be rewarded to the shareholders. And that's what the dividend distribution policy effectively states.
Got it. That is what I was surprised that I saw this line item. So that's why I needed the clarification. Perfect. Thanks, sir. Yep. That's from my side.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up from Neeraj Shah from Aryan. Please go ahead.
Yeah, thank you again for the opportunity. Sir, if you could please highlight how the pricing models do we have when we compare it to recently added customers or some long-term customers. What would be the lag period in passing on the prices, and if there are any open contracts, so if the price passed on is immediately passed on or with a lag, if we have any open contracts as well.
So, Neeraj, this is an industry practice, and we also are, I would say, by and large, the industry practice that contracts are fixed quantity, fixed price contracts, and that's how it's the onus of the manufacturer like us to see that we are able to cover up our raw material and avoid volatility in raw material pricing. So for us, the contracts, could be a long-term contract, like a customer placing an order for X tons to be delivered over 6 months of time, so much every 2 months or every 1 month, and there could be contracts which are to be completed in 1 month's time. Some PSU contracts run over, more than 6 months, sometimes 8-9 months. So there are all kinds. But one thing is clear that, it is always, when we are booking a business or when we are bidding for a business, the prevailing raw material pricing and prevailing costs are always considered.
Understood. Just a minor detail I want to understand over here, that if it's a 6 month or a greater period contract, then the pricing would be fixed at the start of the contract, or would it be adjusted for any changes in the raw material going ahead, because the period of contract is elongated over there?
So in 95% of the cases, I would say, or probably 98% of the cases, it will be always a fixed price contract.
Understood. Right. Fixed price. Okay.
Yeah.
Okay. Got it. Yeah. Thank you so much, sir.
Ladies and gentlemen, that was the last question. I would like to hand the floor back to the management for closing comments.
Okay. Thank you. Thank you so much. So I would just like to say a few words before I conclude. This transformational journey is being steered under a well-defined strategy, and progress so far has remained very satisfactory and encouraging. As a high-value product manufacturer, Welspun Speciality has already made its presence felt. With gradual ramp-up of operations, there is a significant room for growth in our performance and progression towards market leadership. The company is already serving various sectors and continue to focus on further market penetration in niche value-added segments and products. We are confident that business performance will sustain and further improve on the back of several new customer approvals, accreditations, development of products, and penetrating new markets. I hope I've been able to address your queries. For any further questions, I welcome you to contact our investor relations desk. So once again, I thank you for attending today's discussion, and I look forward to meeting you again soon.
Thank you, members of the management.